Welcome to another video about the stock market. By the way, I'm recording it right before the FOMC. I wish I would have recorded it a little sooner, but I had to take care of some things. Anyway, before we get into this video, just this is a plain simple video. The reason for that is I didn't want to include too many graphics or anything, just wanted to give you the information real quick. So this way you can, use it however you choose. And again, not a financial advisor, so talk to your financial advisor for advice. This is for educational and entertainment purposes only. All right, so this is, sorry about the cough. But anyway, so I wanted to see what is the bullish and the bearish aspects. And again, I'm mostly referring to S&P 500, which that's what I'm looking at. But it would apply to uh, all the other things as well: Dow, Nasdaq, and Russell as well. So I kind of made this. If you can see over here, um, see, these are the items. Like I'm looking at this, and what could be bullish and what could be bearish. And I couldn't find too many reasons to be bullish. So the FOMC, let's say, they may say that they are cutting rates sooner rather than later, and I'll explain this in a little bit. Um, that could be bullish. And the trend is actually bullish, but it's a bit extended. So these are the only two things that are bullish. And then, if you look at CTAs, these are the whatever commercial traders or whatever it is, you can just Google it. They are max in, according to the reports. It's all the way at the top. They're max in. Same thing with hedge funds and money managers. And S&P is close to the top, and has had a good run so far. It's almost up like, this a little bit idiotic that you have to get rid of the pen, this. But anyway, sorry. Okay, so if you look at this, it has been, oh, look at that. Oh, the annotations are coming over here too. Next time I'll use a better program for doing this. But anyway, so it is up close to like 20 percent, 20, a little over 20%. Last time when the market was this extended, as you can see right here, was 20, almost 22%. We had a big drop. Okay. So, that's what I'm guessing. And so that's what the market is extended. And let's go to back to this. Now the earnings are, companies as you saw yesterday, Microsoft, Google, even though everything was in line, everything was good, more for the most part, still their stocks dropped because, they're way high, and market is expecting a lot more. Plus it's an excuse to actually just take some chips off the table, make some money. Now what about a neutral observer? Somebody just looking at the chart, like right here, may not want to enter, so because they might feel that it is overextended. Look at RSI, it's all the way up. Oh, by the way, I don't use too many indicators. I just use RSI and Bollinger Bands, and then the averages, 10, 20, 50, 100, 200. And for the 200, I'm using both simple as well as exponential. For the other averages, I just use exponential moving averages because it's much faster, or much more responsive than the other one. Anyway, so let's go back to this. And so neutral observer, as I showed you, may not want to enter at this point. And also companies actually have started announcing layoffs. By the way, I want to just caution you, many times companies announce layoff because they miss the earnings estimate, and then they say, oh, we're going to fire a bunch of people, and we're going to save billions of dollars, and just so that their stock doesn't drop. So many times the layoffs may not happen, or they may not even have the need for that. So anyway, so as you can see, there are two that are bullish, and one, two, three, four, five, six factors that are bearish. Again, that's not just limited to this. There are lots of other factors too. And then the geopolitical situation and all that, but I'm not including that. I'm just including some of the important ones. Okay. Now the scenarios. So it does it doesn't go away. Anyway, so super bullish scenario, the market could go up another 4 to 5% max. That's what I'm thinking from this point, because Chairman Powell could say something like, "Oh, we're going to cut rates sooner. Everything looks good. Inflation has come down, and we're worried about deflation, so we're going to cut faster, more." And he might say something. I mean, he's not going to say that, but I'm just giving you the extreme scenario. So that's extreme scenario. Then the market would go up 4 or 5%, right? And then the super bearish is he says, well, we're just gonna look at the data, and we're still worried that the inflation could come back, and so we're not gonna do anything now, and the committee will start looking at it later on as more data comes in. Okay. So those are the two extreme scenarios, and then market hears that and then it drops. Okay. Uh, and then this what I think is a likely scenario, like trend continuation. Like market may go down to this market. When I say market, I mean 2050 EMA. It would go down to that and then go up from there. Okay. So the trend continuation part. So let's say you are super bearish. Okay, you could still short the market, and so it could come down to like 2050 EMA, and book profits there. I would take the profits at 20 EMA just to be safe. Uh, so I mean that is more likely. So if you want to trade, you could. I don't use options because I want things to be in my favor. Okay, option, there's a time limit. I would sell options. Okay, but I don't buy options. So another good way to actually trade this market would be by shorting UPRO or SPXL. So these are 3 times S&P 500. So if you you know want to trade, so that's again, I'm not a financial advisor, but I would recommend you can short UPRO or SPXL. Don't put any stop loss on it. Okay. So let's say UPRO is close to 60, so short it at let's say 100 at 60, then another 100 at let's say 10% above, which is 66, another 100 at 72. That's how I do it. I don't put any stop losses because the market can go crazy, and that's how you lose money. Many a times I've noticed that the market does exactly what you thought it would do, but before it does that, it does something else, and then it does what you thought you would be doing. All right. So this is again, I'm not a financial advisor, but if you want to trade, you could short UPRO or SPXL. These are 3 times S&P 500. And along similar lines, you could also short TQQ and UDOW. That is 3 times Dow. All right. So just to recap, I rarely want to go to extremes. So these are the extreme scenarios. But if you think about the most, see, in stock market, think in terms of probabilities, not like all or nothing. So probability, yeah, the trend could go up. Like continuation of the trend, I'm guessing more likely. But even if any of these scenarios happen, the trade that I told you, like shorting UPRO or shorting SPXL or TQQ or UDOW, and do not have a stop loss. Short it, then 10% above, short more, 10% above, short more also. Okay. Because I don't see the market going more than 4 or 5% from this point. All right. So, if you like this video, like it, subscribe, and good luck with the trading, and hope you make tons of money. All right.